Okay, David Brown, and that was the other thing too. I had two Davids, so I'm like, well, which David was it? But David Brown. Okay, good. So we are recording now,
Okay.
and as I mentioned, we were looking at the one of the attachments that you sent me for the trading plan, the Simplicity trading plan. Now, the first one is the more conservative one. So I just want to go over that real quick.
Okay.
Um, you have the big arrow. You
Right.
have the entry arrow set to 12 or 13. So it's set to 12.
Okay. No problem.
Okay.
Okay.
And the support and resistance, yes, the TA, the triple arrow support and resistance set to current. And I also make it white, make the colors white from 4 through 7.
Make white.
Mm-hmm. Because you want to separate those from the simplicity support and resistance.
Okay. So so the TA said we just set the current and the triple arrow make them white. Now which indicator is that?
The support and resistance.
Okay. Okay.
You want to set the setting for the support and resistance dots. You want that to be set to current, like you have here.
Okay.
And you also want the color to be white. Number 4, when you hit the color tab,
Right.
go to number 4 through 7 and make that white.
Okay. Gotcha.
And then you have your 50 simple moving average, which is correct. And then you have your alerts. Now, let's talk about the alerts.
Okay.
The alerts on the moving average, the entry arrow, that has an alert. Now, that will alert you every time the entry arrow populates. However, it will only alert you if you have the MetaTrader 4 up. So you have to have your system up to alert you.
So I have to keep my actual computer running and have that screen open and it'll make the call.
If that's how you wanted to do it, yes. The other option is the trading view. Trading view has an alert, option, and you can put your alert in on trading view, and trading view will alert you on your phone. So you don't have to have your system up. You can be about, out and about, doesn't matter. You'll
Okay.
get the alert on your phone.
Okay. So the entry arrow on MT4, that's only going to show up on my actual computer. It won't call me, but TradingView will call.
Yes.
Okay.
Yes. Mm-hmm. Yeah, they have that on there.
Okay.
So the rules is now, again, this is not the early entry that we're going over right now. This
Okay.
is the other one. So the rules is you don't want to trade against the trend, right? And that's based on whatever the hour, whatever time frame your chart that you're trading on.
Okay.
So if you trade in the hour, then you're looking for the big arrow on the hour.
Okay.
And the same for the others. Everything must support the trend. Absolutely. So that's everything that you're doing is in support or in alignment of the trend for that time frame that you're trading on.
Okay.
Right? So you want to set your alerts. Now let me go back to this because I don't think it was in here. Right at this point here, when you want to go to the higher time frame. So let's say you're trading on the hour. So you're looking at the price action that's on the hour chart. And let's say you have your big arrow, your bearish big arrow populated on the hour. So that tells you you're only looking for sales.
Right.
What you want to do is you want to go to the 4 hour, right? And you want the 4 hour to be in alignment with the 1 hour.
I think you just said it backwards.
No, you want the 4 hour. So if you're bearish on the hour, you want to be bearish on the 4 hour.
Right. Okay.
Yeah.
Right.
Yeah.
Right. That's just it right the time.
Yep. And in addition to that, that's the trend. So you want the trend to be the same, but you want price to also be in the same zone.
Okay.
So if you're selling, you want price on the 4 hour to be in the sell zone as well.
Okay. Okay. When we say the sell zone, that means the boxes. Okay. Okay. Gotcha.
Yeah.
So both of them need to be in the boxes for the most part. Okay.
Yes. Yes. Now, also, Yeah, in the boxes. And if it broke out, just the first candle breaking out is fine, but anything after that, you pretty much missed the move.
Wait a minute. Wait a minute. Hold on. Let me get this. Both time frames need to be in box
Yeah,
and hot zone box, right?
right. And put zone. I like the zone better. Put zone. They need to be in the same zone. I'm gonna go to the chart and show you this.
Okay.
Let's do that so we can see what's happening. Let's see. Where are you? All right. Can you see the chart?
Yep.
Okay. So we got our big arrow that came in here, right?
Right.
So on the 4 hour, I want a bearish arrow and I want price to be somewhere in here as well.
Okay.
So let's go to the 4 hour and we have it. See how price is in and around the box?
Okay. Gotcha.
That's bearish.
All right. Yes.
Now, another thing you could do, which is how I showed it initially, is you can put your horizontal line. If you want to just kind of get your eye accustomed to what you're looking at, you can just put a horizontal line on the bearish candle that's inside of the box. And then when you go to the 4 hour, you just want price to be somewhere around in this horizontal line, which it is.
Okay.
Okay. That's just, something that might make it a little easier for you to see it.
Okay.
Well, keep that there. Okay, so then I want to try to go along with how you have here. So yeah, so everything must support the trend. Now, still on that, then what we want to do is drop down to the 15-minute. And we're looking for the exact same thing on the 15-minute. Right? So here's the arrow, it's bearish. Now, because this is after the fact, of course, you see that move was made, but we already knew that because this was after the fact based on this example. But what you would be looking at in real time is for price to be in the zone and have the same direction on the big arrow. And it actually was, but because it's after the fact, you can't back test the boxes, the zones. But we know that it was because actually it's above it. So that's even better.
Okay. So basically, I'm going to repeat what you just said. If I'm trading on the hourly, that's where I'm going to place my trade. I would go up the next time frame, which would be the daily or the 4 hour.
The 4 hour.
Okay. So I'll go up one time frame to the 4 hour. It should be in the zone. Then I come back. Then I go down one time frame from the hour, which should be the 15-minute. It should be in the zone. And all of them should have a bearish direction, or at least the two higher time frames have the bearish direction, but the lower time frame should still be moving in that direction or something like that. It don't have to be because it moves, it's static and it's already moved. The box, it's already moved out of that box. Am I saying that right?
Well, both time frames, the 4 hour and the 15-minute, need to be in agreement. So it needs to have the same trend direction and be in the same zone.
Okay.
Now, what you're looking at here, we already missed that move because this is just an example. So.
Okay. Okay. Gotcha.
Right? Now, when you're on the 15-minute, that is your entry time frame. So now what you want to do is go through your entry qualifications, confirmations.
Okay.
So you have here, set your alerts. You're not necessarily setting an alert there unless price is not where you need it to be. You can certainly set an alert. So let me show you how that would look. So let's say that now you're on the 15-minute, right? So we're going to be looking at this example. The first thing that we're looking for is for price to close the 50. The 50. Now, this is not the early entry criteria. This is the more conservative one.
Okay.
And we're going to do the early entry as well. So that's what we want. So I'm just going to simply change this moving average to 50, right? Now 50 is just a little safer, right? Gives you, stronger direction.
Okay, that's the simple moving average, right?
Yeah, both of them is simple.
Okay, and it's changed to 50 on this one. Okay, gotcha.
Yeah, yeah. And so what you're looking for on the 15-minute, right? After we determine everything, then what you're going to be looking for is your entry arrow. The entry arrow. When you see that entry arrow, right? Because you had mentioned what was that for? This is the conservative trading plan. So instead, we was doing the 13 simple moving average, which we're going to do, but this is the 50. This is a different plan, and the only difference is the moving average. That's the only difference, right? So
Okay.
we're gonna see we're selling, so we want to wait for our entry arrow because we're selling. The entry arrow almost always aligns with our cross on the moving arrow on the MACD. The cross of the MACD going to the zero line, basically.
Okay.
So we want this entry arrow to be here. And wherever that entry arrow populates, the candle that coincides with it, it needs to break below your 50 and close. If it's above the 50, we wait. So the candle actually broke the 50 right here, this candle, right here.
Okay.
Okay. And then and we look down, we want to we selling. We want to make sure the MACD is above. I mean, the signal line is above the MACD line, which it is for sales. Okay.
Oh, okay, wait a minute. Say
You
that
see that?
last line again.
Yep. So we're selling. So we want the signal line, which represents sellers, to be on top of the
Right,
MACD
right,
line.
on the MACD.
And it is. It is. Right.
Okay, so I'm gonna go back. I'm gonna ask you on the MAI setting.
MA1.
The MA1. That's going to be 12.
Yes.
Okay, and the simple moving average is in the gold instead of red now, right? And you
Right,
made
because that's the 50. That's the 50 simple moving average.
okay, and you made it gold instead of red, right?
Mm-hmm.
Okay. Okay.
Yeah.
All right. So on step number 8, it says, did the entry candle close IAW position? What is IAW?
In accordance with.
Okay. So explain that briefly to me.
Okay, so we're not there yet. I don't know.
Oh, okay.
Yeah.
My bad. All right.
No, you're fine. So on your at this point, when the candle breaks the 50 and close, and it lines up with your MACD, this is where you can enter. You can enter. Now we want to be looking left, right, to determine where we're going to get out. Right? Now we also, the question you want to ask yourself is, when the candle closed, did it close on a support or resistance dot?
Okay.
Did the candle close on so you got to have your triple arrow support and resistance on here. Right? Let's make those white. And the input is going to be set to current. Because this is going to let us know what potential pullbacks would be in between the runs. In between the runs. So now, this is the candle that broke and closed. The 50 is bearish because it has to be bearish because we're selling. We look left, we're looking for support or resistance dots, right?
Right.
Where we want to get first, we want to ask ourselves, did the candle close on one? And if it didn't, then what we want to do is look for the previous support or resistance to determine where we can potentially take our profit. So from the close of the candle to say these dots right here is 15 pips, right? These dots right here is 31 pips. These dots right here is 40 pips, right? So
Right.
these become your potential take profit. These become your potential take profit.
Okay.
So what you could do is at that point, you enter the trade and you identify where you're going to get out. So you might say, I'm going to get out right here. So this is where you would put your TP at. That price 139.449, that becomes your take profit price.
Okay. I'm gonna go back to the to the crossover.
Okay,
In actuality, slide over 2 candles to your right.
right here.
Now go over some more.
Oh, over here. Over here.
Right. No, the long one. Okay, go over one more.
Right here.
Yes, it's a berry candle, and it has a wick on the bottom of it.
Right.
And it sits right on top. Now, does the close? Okay, for instance, like don't move the cursor, but the other bear candle has a wick that's touching one of those lines. And so the actual, as a matter of fact, the moving average is slicing straight through it. So would that be a qualifying, because it closed on the actual moving average, or would it have to be below the moving average line?
Yeah, it definitely has to be below. It needs to close below it.
Okay, so the one that I identified is the actual candle then that we would use if we were
No,
doing.
it would be this one because this candle closed below the moving average.
Oh, okay. So the bottom of the candle, not the wick, has to be below the moving average.
Absolutely.
Okay.
Yep, and that's the body.
Right. The bottom.
Mhm. So for a sell, the body is at the bottom because it closes at the bottom, but the body. And it don't have to be the whole body of the candle. It just
Just
needs,
part of it.
the close of that candle needs to be below your moving average for a sell,
Okay.
and for a buy is the opposite.
So, all right. So the buy, would it be the top of the body has to close?
Above the moving average for a buy. If we were buying, then you see like this bullish candle right here.
Right.
The body, the close of that candle is above this moving average.
So it will qualify.
Yes.
Okay. Okay.
Yeah. Good questions. Good questions. And so now, charge this up. Okay. So in that case, right? So this candle right here is the qualifying candle for this particular position. This
Okay.
bearish candle. And the question becomes, did it close on a support or resistance dot? It did not. Then we want to look left to see where we're going to take our profit, right?
Okay.
My suggestion is not to just go straight to this one, the lowest one. You want to secure profits. And what I would suggest for you starting out is that you identify where you're going to take your profit and put that price in your system. So right here is where you're looking for anywhere. If you're looking for 20, but no more than 30. Okay. 20, no more than 30. You can actually just do the 20 because we want to walk away with 20 pips. So you see these dots right here, that's 22.
Right. Okay.
Yep. And that price point is where you would put your price for your TP. Now your stop loss, right, for the first position is going to be above. The stop loss will be above your big arrow, and in this case, it has support dots in alignment with it. That don't always happen, but in this case it did, so it can just go above those dots as well.
Okay.
If you don't put it above the arrow, you can just put it above the dots.
So when you say above the arrow, it has to be at the top base of the arrow, or if those dots weren't there.
Yeah, if the dots weren't there, then it'd be like right
there. Okay, yeah. Gotcha.
Mm-hmm. And oops, so now you've entered in, and let's see here. Let's say you took your profit right there, right there. Clearly, you would have made your money right here. This bearish candle, you would have made your money. Let's say that you put your take profit right here. You can see it takes a little longer because you get going for more pips. You would have made your money right here.
Okay.
Now,
we're on the 15-minute, right?
Yeah.
So if I would have ended there, it would have taken me about 1, 2, 3, 4, approximately. Wait a minute, because that first resistance, that's like 2 hours.
Yeah, you would have been out of the trade the same day.
Okay.
Yeah, you would have been out of the trade the same day for sure. Now, always remember, if you are selling and your trade is running and it's going down, once it goes into your green, your demand zone, you want to go ahead and get out, because now buyers are going to start to come in.
Okay.
So same thing if you're buying, when price reaches your zone, your supply zone, go ahead and take your profit, because sellers are going to start to come in.
Okay.
Now, so that is basically, that's how the 50 trading plan works. You're still doing the 20 pips. Now you said 20 pips per day or 2 positions at 13 pips each. Yeah, you can break that up anyhow, however what you want. As long as when you break it up, make sure that you divide the lot size with the total of positions that you're taking. So if you have a 50-cent lot size and you're dropping 2 positions, then each one will be 25 cents. Each lot size will be 25 cents.
Okay.
That makes sense?
Yeah.
Yeah, because you don't want to over leverage. So if your lot size, say for instance, your lot size is $1, and you have
2 positions, they're 50 cents.
It'd be 50 cents. It won't be $1 because now your lot size is $2. You see what I mean? So you want to make sure that you always divide your lot size by the number of positions that you're actually taking.
Okay.
Yeah, that's risk management. Protect your account so that you're not over leveraging your account and get a margin call.
Okay, so okay, I'm trying to ask something. Let's keep going. It'll come back. It'll
come back.
I know what I want to ask, but I can't formulate it. And
I got you. No, sometimes it just takes a little more, talking about it before it actually registers. I totally understand.
Okay. So this is what I saw. Okay, I'm a back into it by something that I saw that you did just the other day.
Okay.
You took a trade, and it was the same trade, but you took 3 positions on that trade.
Yes.
And when everything was said and done, if you would have just taken the 1 position, it would have been like $100. But because you took 3 positions, it was like $150.
No, it's not $1.
I mean $300. Okay.
Well, no, you don't see dollar amounts.
Right.
We don't really show those just for compliance purposes. But so what you see is, well, yeah, you may see the total amount that you got, but what you're really looking at is the lot size for the pair. The lot size for the pair. So, for instance, if my lot size, like I did GJ this week, so my lot size was $20 for that trade. But I did, if I would have put one position in, my lot size would have been $20.
Okay.
But to balance out and kind of protect my account more, I broke it up into 4 positions. Each position was $5.
Okay.
Now, the amount of pips that I got was about 25 pips.
Right.
So it's 25 pips times the 4 positions.
Okay.
The total amount of pips would have been 100, right? So 100. 100 pips. That's pips though, not dollars.
Right.
So it's 2 different things. So really, but how can I say? Okay, so really I only got 25 pips. But
Right.
because I broke it up into 4 positions, it became 100 pips. But
Okay.
I was not in the market any longer than if I just had that one position.
Okay.
You know what I'm saying? So
the question is, did you make the same amount as if you would have entered your one lot size against the trade, as opposed to breaking it up into 4 positions?
yeah, I would have made the same amount of money had I put one position in or those 4 positions.
Right. Okay.
See, the benefit of stacking is what that is.
Right.
Is that you manage your risk, right? You manage your risk because if you're over leveraged on your account, the broker can call you what they call a margin call,
Right.
and basically take you out the trade. So when you break it up, the system reads the 50 cents, not the $1, not the $20.
Okay.
So it's from a leverage standpoint, the system and the weight of that account is based on, if it's one position, $20. So now I got $20 on the trade, which decreases my leverage because it's more weight. That's like if you take a 20-pound, a 20-ton or a 20-pound rock or whatever,
Right.
And you put it on the scale. It's 20 pounds. You take the same 20-pound rock and you break it up into 4 pieces. You got 25 pounds now out of it. Does that make sense? 5, 10, 15, 20. So I took a 20-pound rock and I broke it up into 4 pieces, equal pieces.
Right.
Equal 25 pieces. Did I lose you?
Yeah.
Okay. Okay.
Okay, because I'm thinking, all right, 20-pound rock,
20-pound rock
divided by 4.
divided by 4
Each little sub rock would be 5 pounds.
will be 5 pounds. And so now that's lighter, right? That's lighter. The weight is lighter. And that's what the system is reading. The broker is reading the 5 pounds instead of the 20 pounds when you break it up like that. So now the margin is not as heavily impacted because it's only being weighted by 5 pounds instead of 20.
Okay. I get it, but it seemed like the computer or the system would say whether it's 5 little rocks or 4 little rocks or 1 big rock, it's still the same leverage, but evidently it's not.
No, it's not. No, it's not, because it does not impact your leverage the same way.
Okay,
No.
so it's something in the way that it's computing.
Yep.
That. Okay, I get it now.
Yeah.
Okay.
Yeah. And so, but as far as the amount of pips that you're getting, that's the same. I'm still going for 25 pips.
Right.
Right. And so there's no different there. I'm still going to make the same amount of money if I did it that way. Right.
Right.
So it's really no difference there, but it does give me the ability to be in and out of the market, right, in one swoop. So for instance, if I wanted to make $500 on this particular trade, I want to do that with as minimum risk, i.e., I'm a stack. And I want to be able to get pretty much in and out relatively soon. So I don't want to stay in the market any longer than I have to, right? So if I want to get $500, I may have to enter separate positions to get the $500.
Okay.
So, but if I stack it, right, I can stack it and get my goal in that one trade though, that one trade. So now I don't have to put in multiple trades to try to get that amount.
Okay, so this is the last question. I think this will halfway clear it up for me.
Okay.
So you enter 4 positions on the same trade, and so you wanted to go to the 20 or your first TP1, which you think is going to be between 20 and 25. So what you do at the 20 and 25, you take your profits off of the first one, especially if you think it's going to go further. You take your profits and you move the stop loss up on the other 3 positions. Does that make sense?
No, you saying when I stack, is that what I'm doing?
Yes.
No.
So okay. All
no,
right,
I'm
we'll
not
get
doing that.
later. We'll get that.
Yeah. What you describe is another way that you can, basically capitalize on the larger pip count. So you can put, and you did put this in your example here too. You could drop 2 positions. The first one would be, in this case, say you got in right here.
Right.
So your first position, TP, would be here.
Right.
Now, once it hits that, boom, it takes you out. You're done. And then you got a second position where, say, your TP is here. And once you hit that, you're done. It took you out.
Right.
And I think that's the best way to do it for now until you get real savvy. That's the best way to do it because you are able to identify it before you enter the trade.
Right.
So you're gonna, if you go that route, if you want to drop 2 positions, guess what? You can do that. You identify, I'm gonna get out here on my first one, and then I'm gonna get out here on my second one.
Okay. All right.
So the first one is 20 pips. The second one is 39 pips.
Right.
Right?
Yeah.
So how many pips total would you have obtained?
59 pips.
Say again?
59 pips.
Right. Right.
Yeah.
That's how you do that.
Okay. I'm sorry.
No, go ahead, because I want you to get it out. I know how it is.
No, I'm just saying, I'm trying to grasp, and it'll come. So don't sweat it. I'm just gonna say I don't get it for now. So I'll just give my little 20. And,
yeah.
And a light will come on after a while.
So it will. I promise you. And it won't take long after you get your rhythm of getting your 20. So I agree with that.
Okay. So all right.
All righty. Now the trend surfer, you notice I don't use the trend surfer. If you want to use it, fine. I think that it can be a little confusing. I don't think it's totally necessary. So I don't use the trend surfer.
All right.
In this whole equation of things, right?
Okay, for both.
Yeah, for both.
Okay.
So you have don't trade against the trend. Did you get the entry arrow? Right? That's one question.
Great. That's a small one, right?
That's a small one. Yes, because you got to have it, right? Okay. Did the entry candle close in accordance with the position? Great question. Meaning, did the candle close below? I would prefer that you put, did the candle close below the 50 moving average? And then in parentheses, put sell. And did the candle close above the 50 moving average? In parentheses, put buy.
Okay.
Because that's what you're looking for.
Okay, the candle close below for sale.
Below the 50.
For sale, okay. Or did candle close above the 50 for a sale?
For buy.
for buy. I just got them mixed up.
Okay.
Wait a minute. The candle closed above the 54 sale.
Above is for a buy, below is for a sale.
Okay. Did candle close below 54 sale?
Correct.
And did it close above 54 buy?
Absolutely.
Oh, okay. Right. Right.
Mm-hmm.
Gotcha.
All righty. And then did the candle close above did the candle close at previous okay, so did the candle close at previous support resistance within the past 48 hours? So yeah, so what you're saying is when you've identified that candle, did it close on a support or resistance dot?
Okay.
And if no, look at your previous support or resistance to identify where you're going to basically take your profit.
Okay, and if it did close on a support resistance, look at the next one, up or down. That's 10 pips or above.
No, if it did close on a support or resistance dot, don't take the trade. Wait for price or the candle to break those dots.
Okay.
And I'll show you what that looks like.
Okay.
Okay, so for instance, if the candle actually closed right, like you see these dots?
Yep.
If the candle was like sitting right there on it, right there,
right,
then what you want to do is wait for the next candle to actually close below the dots.
Okay.
Because if it don't close below the dots, it's still, you're still gonna have to deal with these dots. So just wait for it to close below the dots.
Okay.
And then take the trade.
Okay.
Okay.
Mm-hmm.
Now, is the MACD descending or ascending the zero line? Great. Because the entry hour, remember, the minute you get the entry hour, you want to check your MACD to make sure that it is in alignment with the position. So if you're selling, we need for the signal line to be on top.
Okay. So here's a question, and once you answer it, I'll have it for life.
Good.
Does it matter whether the MACD lines are above or below the histogram?
Now, in this case, no.
Okay.
In this case, no. Now, there's a different way, because you can trade the MACD different ways.
Okay.
Now, I will say this. If it is above the histogram, you're in overall buyer's territory.
Okay.
If it's below, you're in overall seller's territory.
Okay.
Now, if you're selling, right, the beginning of the sale, like the beginning of the trend, it's going to be above. It's going to be in buyer's territory. It has to actually descend out of buyer's territory into seller's territory. Okay. Right? So really, no. We're going by the big arrow, the entry arrow, and the moving average line on the
Okay. Okay. So it doesn't matter as long as the blue is above the red or crossing, and the red is above the blue and crossing for the buyer of the sale.
Yep.
Okay, gotcha.
And did the candle close below the 50 if setting on triple is okay? So did the candle close below this 50? We already established that, but you have in parentheses if setting on the triple is 7. Now you're talking about, I'm assuming you're talking about the simplicity setting. That's not involved in this trading plan. So we want to remove that out of the equation.
So we're going to remove number 12 and number 9.
Yeah, remove number 9.
Okay.
Well, you can keep 12. Did candle close below the 50? Just put above or below. But yeah, you can keep that. But what you have in parentheses, take that out. That's going to confuse you.
Okay. Keep, but, okay. So keep 12. Okay. Gotcha. All right.
Okay. Do you have 12 or more pips from the close to the previous support or resistance dots? That is a good measure. If you want extra precaution, that's a good measure. So what that looks like is, we're right here. We're right here.
Right.
Okay. So from the close of the candle to the previous dots below the close of the candle, that will be right here. We got 4. Okay.
Okay.
And then the next was here. That's 13. The next, of course, there'll be more. Okay.
Right.
So you can use the 12 pip rule for extra precaution, because that's going to help you minimize drawdown even more. Now, you're never going to be 100% free of drawdown, but it will, minimize it more for you if you want to use the 12. You really don't have to, based on the MACD, right? The break and close of the 50. And but if it's sitting on the dots, absolutely wait. Absolutely wait.
Okay.
Now, from the close of this candle to these dots right here is about 3 pips. And what happened? The next candle pulled back on you. It does indicate that. We don't know how far, we can go more in depth. I want to keep it simple, because I would have definitely took this only because we got resistance up here and we've been hitting against this. So I would have took it, but just to keep it simple, if the candle closed on a support or resistance dot, like sitting on it, then wait until the next qualifying
candle. Okay.
Well,
you don't really have to use that 12 rule.
No, unless you want the extra precaution.
Okay.
Unless you want the extra precaution. So I try to create the plan to kind of accommodate different risk tolerance for people. Okay. You know what I mean?
Okay. All right.
Now, always look left to identify support resistance in relation to the close of price, right? So you look left to identify support and resistance, and that what you have identified becomes your TP areas. So we have, the dots here, all of this, you got your consolidation here, dots here. These are potential areas where you could take your profit.
Okay, just real briefly, we have green dots as well. I should be just focused on the white dots, correct?
Unless, well, not necessarily. Yeah, you focus on it first. Focus on it first. And the reason I say that is because the green ones and the red ones are simplicities, and they are longer, further out, right? Those are in alignment with key levels on the fib. So yeah, just to kind of keep it safe. Now, sometimes you're going to see where the white and the green or red are together, and that's fine. And that's fine. Just, use those areas, right? Because it just depends on your entry and where you are in the market. Okay. So you have the settings of 7 on the simplicity line. Now my simplicity settings is defaulted to 20. But that is not part of this trading plan. So you really don't need that here.
Okay.
But just so you know, my settings on the simplicity is the default setting of 20.
But I'm not going to be using that.
No, so that setting refers to the triple arrows for the simplicity.
Okay.
And when it populates. Now mine is set to the default of 20, which is the most conservative setting. So it's less risky, but it also means that it's going to take longer before the triple arrows actually show up.
Okay.
When you make that number smaller, then the arrows will populate sooner, and it's a little more aggressive.
Okay.
Mhm. So that's trading plan number one.
Okay.
Really, the only difference between the two is the simple moving average. That's it.
All right.
So, in other words, what's different is instead of waiting for the cross of the 50, which will take longer before you get in a trade, you're going to wait for the 13, which will get you in sooner.
Okay.
But you're still going to follow the same criteria.
Okay. Now, is that part of the early entry, or we haven't gotten to the early entry yet?
No, this is the conservative one,
Okay.
and that's the entry for the 50. So with the 13, I'm gonna just change it back to the 13. Now we got the 13. Now you notice the difference, right? The 13, where did the candle broke, because we still get a candle, still got a break. So the candle broke right here on the 13. This candle.
Okay.
Right here, right? Now just keep a visual of that. This is the 13. Now let us put that 50 on here, and you'll see, I'm gonna keep it red. It's just gonna move. Now that line is down here. So guess what? This move basically from here to this candle is about 10 pips that you did not get because you wait for the 50. Nothing's wrong with it. It's 50 is just more conservative. That's it. But the early entry is going to allow you to get in early and capitalize on more pips. That's basically what it does. And every entry is different, and the difference in the pip count will be different as well.
Okay.
So I just wanted to show you that.
Okay.
Yeah, just wanted to show you that.
So,
Alrighty.
so just to get back on our entry arrow for the MA1, the 12 is the more aggressive, or the 13 is the more aggressive?
Okay, so those are two different things. You have the MA1, which is a moving average, but it's in the entry arrow. So
Okay.
your 13 moving average is this line. Your entry arrow is the arrow, but within the entry arrow, the settings of the entry arrow is 12.
Okay. So the 50 simple moving average, we can make that. Oh, okay. What's the number we have on that one?
On the 50,
Yes.
50. Now we're not talking about the arrow though. On
Okay.
that one.
We're talking about the line, the line that was gold, and then the line that was red.
Right.
That's the moving average.
Yes. That's your
What?
simple moving average.
Right. So what made it more aggressive that you kind of got in a little early?
The number, the 13 is more aggressive, where you got in early.
Okay. But that has nothing to do with the entry arrow.
No.
Okay.
Now, the difference in the numbers and what that actually means is that the lower the number, the moving average is just that. It gives you an average price range of the previous 13 candles, or the previous 50 candles, or the previous whatever number you put.
Okay.
So if you want to measure the average price range of the last 100 candles, then your moving average would be set to 100.
Okay.
And it gives you that, it gives you that average, that range. Now, the higher the number, the stronger the trend. The
Okay.
stronger the trend direction,
Okay.
the
So,
higher the number.
So we made it 50.
Yep.
Okay.
So 50 gives you the average of the previous 50 candles, right? Price
Right.
range. And the 50 is like that baseline medium where buyers and selling territory is identified. So when price is above the 50, you're in a buyer's territory. If it's
Right.
below, you're in sellers.
Okay. So, and I know I've asked this 3 times. I'm
It's
just trying to
okay.
get. So, what made it? You made one red and one gold to show me the difference. What made the difference in those moving averages?
The number. So one was 13 and one was 50.
So you moved the 50 moving average down to 13?
Yeah, so you simply just change the number. So right now, this is 50. This is the 50 moving average.
Right.
And the reason is because I changed the number from 13 to 50.
Oh, okay. So it could be 13 or 50.
Yeah, yeah. So when this box pop up here,
Right.
see, I got 50 right there. I
Okay.
just didn't change the color this time because that's up to you what you want it to be. But I got the 50 there, so it moved it. Now, if I put the 13 back, now you see where it's at, but watch, it's gonna move.
Right.
Now it's back up here.
All right. So which one is the most aggressive, 50 or 13?
13.
The lower the number, the more aggressive.
Yes.
Okay, good.
Yeah.
Okay. Gotcha.
Mm-hmm.
All right. I'm learning. I'm learning.
Yeah. Listen, it takes time. I think you're doing great.
Okay. All right.
Okay. So now, like I said, all of that is to say, I'm just kind of going through questions. Now you said, is there a difference between the early entry versus the trend line entry? I'm not
Okay.
sure about the trend line entry.
Okay. So no. So I may have been calling it the wrong thing.
Okay.
I was asking, is there a difference in early entry and this is what we're doing now, which is you call it the conservative trading plan?
Yes.
Yeah, that's what I was asking. I was trying to figure out were there 2 plans that we were using. Because something wasn't adding up.
Right.
So
Right.
that's why I asked that question. So the right question to ask was, where's my question sheet? The right question was, is there a difference between early entry and I called it a trend line? And the reason why I call it a trend line because on one of them you drew, well, all of them I found out now you do not trend lines. Yeah, you drew a line back for the number of pips or whatever, blah 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 blah. Okay,
Right. But take the trend line out the equation. That'll handle.
Yeah. I'm gonna call it conservative trade plan. Okay. All right, got that one. And the answer to that is yes.
Mm-hmm.
All right. So you want to go through the other questions first, or you want to do the early entry?
Okay. No, we'll do the early entry. Now, as far as now, you talk a lot about the ADR, ATR out the equation. I'm not saying that those things are not effective, but I don't use that. It's not a part of our trading plan at all.
Okay.
So we got the trading plan down. The compound sheet, did you get a copy of that?
No, I did not. That's what
okay, because it's in the Telegram group. It's in the files of the Telegram group. The impulse consolidation, we did that. Right. So your definitions, impulse is always in the direction of the trend. The impulse is the first move in that direction. So if it's bearish, the first bearish movement is the impulsive move. Consolidation.
Okay, so impulse is the first move in direction of the trend.
Absolutely.
Okay, gotcha.
And the consolidation obviously is a range, right? It's just
Yeah.
kind of ranging.
Right.
We never trade consolidation. Now, if you're in a trade and it happens to consolidate, okay, fine. But you don't get in a trade when it's
On a
consolidated.
consolidation, right.
Continuation. Now, continuation is basically the same direction of the trend as well.
Right.
Then, of course, correction is a pullback.
Okay, did I get that right? When it pulls back to the moving average, or when it pulls back to the previous support or resistance?
Right. And how we measure that, of course, is structure on the left side of the chart. And again, the same way that you identify potential take profit, you're using the same methodology to identify pullbacks as well, how far it's going to go.
Okay, so instead of it pulling back to the 13 MBA, it's pull back to the previous SOR, right?
You can't put a lock on where exactly it's going to pull back and stop. We can only assume it. Honestly, I hate to use that word, but looking left, we can say, okay, we know that it's going to come to this point, but it could come to that point and keep going.
Okay.
But keep in mind, right now, that's not part of what you want to. That's kind of deviating away from the trading plan and what you have to.
Okay. Well, I'm just trying to get it. When I hear people talk, I was getting kind of like pullback, retracement.
Right.
I knew a continuation is like when it gets back to where it's supposed to go, but I had some things, the impulse, that sort of deal. So I know some of those words are interchangeable. I just want to be clear on them. So.
Oh yeah, absolutely. Just don't. It's not part of the trading plan, so you don't have to kind of try to figure out how to put that in there.
Okay.
I don't want to confuse it.
Okay.
Okay, so your confirmations for the intraday, same trend at higher time frame, yes. One time frame higher.
Okay.
Closing of the candle above or below the 13 or the 50, whichever one you're using. The MACD need to be in alignment with that position. So if you're on the 13, the MACD need to be, and it's a sell, the MACD, the signal line need to be on top.
Right. I got that.
And then 4, determine your TP 1 and 2. Yep.
Okay.
Okay. Now what I do want to put in here though is closing of the candle above the 13 or the 50. Then the confirmation under that would be, did the candle close on or sitting on a support and resistance line?
Okay.
Is the candle sitting or did the candle close on a support or resistance line?
Okay.
If yes, don't take the trade. Wait for the next qualifying candle.
Okay.
If no, then proceed.
Got it.
Okay, let's see. Okay, checking the news. Yeah, you always want to check the news before your trade. I do an hour before and after.
Before we go there, right there, I have an asterisk, and I said I'm not sure whether entry arrow confirmation plays into this. So
Right.
My confirmations does the entry arrow have anything to do with anything what we're doing? Does it confirm anything, or does it tell me anything?
Yeah, we talked about that. So the entry arrow for the 50, on the 50, when you're using it for that trading plan, you have to have the entry arrow. But
You
I
have
think
to
you had
have,
it in here already.
huh?
I thought you had that in here already. But okay, let's put in confirmations. So same trend, higher time frame. And after that, so same trend at the higher time frame. Next confirmation. Did the entry arrow populate?
So that would be number 7.
Number 7. Yeah, I'm at where you have look for 4 confirmations. I'm in that area.
Okay.
So I think it's 6. So same trend, higher time frame, yes. After that, I will put did the entry arrow populate?
And that's on both time frames?
Right. No. On the 15-minute, because that's where you're entering at.
Okay.
Mm-hmm.
So if I don't see the entry arrow if I'm trading the 15-minute, if I don't see the entry arrow, don't enter the trade.
Don't enter it.
Okay.
You want your entry arrow because that's in alignment with the MACD being at a certain point of the histogram. That's what we need. And
Okay.
it's in alignment with that. So wait for that. Typically though, if it's not there, it'll be there the next candle, but it's almost always there.
And I can enter at either point, but I can enter at the arrow,
What arrow?
the entry arrow, or do I have to still?
No, you got to go through all your confirmations.
Okay. Okay. Good.
Yeah.
Good.
Mm-hmm. And if everything check out, then you can enter in.
All right. Cool beans.
Now, but that's what, make sure for that one, you put in parentheses the 50 moving average, because that's not part of what we're looking for on the 13th.
So are we looking for anything on the 13 at all?
Yeah, we're gonna go through that. I want to make sure we shore this up real good.
Okay. All right.
Mm-hmm. So everything we're talking about here is the 50.
Okay.
Then the MACD, red top, that's right. Determine the TP, that's right. Okay, so closing candle above the 50. And then the next one would be, did the candle close on a support or resistance dot? I think he said
Okay, I got that one.
Okay.
All right.
If yes, wait for the next qualifying candle.
Yep.
So now we start with the 4-hour time frame. I start with the 1-hour time frame.
Okay.
I'm looking at price action on the 1 hour. I go to the 4-hour for directional support. That's it. Then look for pairs that are in or close to the hot zones. Yeah, what we're looking for, yes, the big arrow, preferably, within 1 to 2 candles after it populated in one of those zones.
Okay.
And then look for and record white arrow. Look for and record white arrow trend direction.
Okay. So what my thoughts is I'm scanning the market in the morning and I'm looking for a setup. So if I find something on the 15-minute or the hour, then I need to find something else that's another time for higher.
So when you're scanning, when you're looking for setups, what you're looking for, which you have it here, is the big arrow in one of these zones. So
okay. Okay, just like what we're looking at right now.
Well, let's do it in real time. We're gonna be on the hour chart.
Okay.
We're gonna be on the hour chart. Don't look at anything else. Look at the hour chart. On the hour chart, we're looking for the big arrow to be inside the beginning of it, preferably one of these zones. And we're looking preferably the first 1 or 2 candles after the big arrow populate. It just depends on when you get there, right?
Right.
Let's say you got to go through the whole process anyway. So, you're going to do that anyway. But that's what we're looking for. That's it. So you can scan the market. And like in this case, we're on an hour now. In this case, price, or we already missed the move. All of this price action, we missed the move. We want to catch it in here before it breaks out. That's when we want to catch it.
Okay.
Right? So
Right.
we came to the market, we saw this, boom, we're going to keep going.
Keep going.
Yep. And it's on the hour. When that criteria is met on the hour, then we go to the 4 hour, see if we got the same. We go to the 15, see if we got the same. But it has to happen first on that hour.
Okay. So when we scan the market, we scan the hour.
Yep. We're on the hour chart.
Okay.
Right? Hopefully I can find one. Usually on Fridays. Okay, boom. Big arrow.
Okay.
Right? We got our first candle. We want 1 or 2. Now it's bearish. So we're looking for some bearish candles. It's still going up. So this will be a pair that you would write down and keep an eye on. Because what you're looking for now is for 1 to 2 candles after the big arrow. That's bearish because we're selling.
Right.
Right? So right now it's too early. This will be too early. Nothing's going to line up right now. So
Okay.
if you go to your 4 hour, okay, so good. On the 4 hour, we're bearish.
Right.
Bearish candle, but we still don't have any bearish activity yet. Okay, no problem. Now we drop down to the 15-minute. Bam, we're bearish. And we have our first bearish candle. Well, it's on the arrow. So again, it's still early, right? This is still early. And here's the other thing. We didn't have no candle to close the 13, so we ain't doing nothing anyway.
Right.
So,
I see it.
Right.
Hallelujah. I see it.
Good.
I see it.
Yes. So this is odd NZD is one you want to write down for potential sale, right? And the only thing that you're waiting for now is for a bearish candle to
close below the line.
That's it. For your early entry and for your 50, you're more conservative, you're looking for it to close below the 50.
Okay.
I personally would not wait for the 50. I won't get the early entry, right? But either way it goes, you have to wait for price to close below.
Okay. So, but we haven't talked about early entry yet, have we?
No, everything that we do for the conservative one is the exact same thing that we're doing for the 13. So I just went through the 13. I'm gonna do it again so you'll know we specifically talk about that.
Okay, well, wait a minute. Time out. When you say the 13, okay, we ain't got to this at all, right?
What is that?
This is what was out today. It came out, it says the rules of engagement for early.
Oh, yeah. Yeah, we did that.
Huh?
We did that.
Okay, see, because I thought everything we was doing was conservative.
Right, we did. That's what we're doing now. You're gonna find that everything is pretty much gonna be the same, but it's gonna be the 13. So let me do that for you.
Oh, okay, so let me say this. Let me put this postulate out here. When we're talking early entry, we're talking the basic difference between early entry and a conservative is the 13 and the 50.
That's it.
Oh, okay. So early, wait a minute now. The lower, the more aggressive. So the early entry is the 13 and the conservative is the 50.
Absolutely.
Ah, see? See? I'm coming along.
Oh yeah, yeah, you got it. You got it.
Okay. All right. All right. I'm straight. I'm real straight now.
Now I'm gonna go over the 13 rules of engagement. Let me make sure I answer these questions here. Wait for the candle. Yep, the body. Good, good, good. Is the magnet crossing above? Yep, we got all of that. Look for the left side next to zones. Areas, activities. Yep, yep. Yeah, you good to go on here. Okay, so now let's talk about the rules of engagement for the 13 early entry strategy. All right. Okay. The first thing we're going to do is we're going to be on the hour. We're going to plant our seat on the hour chart.
Okay.
So on the hour chart, we're looking for a big arrow to be in one of these zones.
Okay.
Right? And preferably, we want to catch it early enough to where 1 or 2 candles after the big arrow has populated.
Okay.
In the direction of the big arrow. So if it's bearish, we want 1 to 2 bearish candles to populate after the big arrow.
Do they need to be contiguous?
No.
I mean, right next to each other. They don't have to be. It could be a bi-candle in between them.
Yeah.
But as long as there's 2.
Yeah. No, 1 or 2. So let's just say 1. I mean, for simplicity's sake.
Okay.
Right?
So
then
1 or 2 candles after big white arrow.
Right. 1 or 2 bearish candles, or how you want to put it, 1 or 2 candles in parentheses, put sell, you know, red for sale, however you want to do that.
All right.
That's the first thing. Now, once we have that on the 1 hour, then we go to the 4 hour for directional support. And we're looking for the same thing. Big arrow in the zone, in the same area.
Looking for 2 arrows.
You said 2 arrows?
You said wait a minute. I'm sorry. 1 or 2 candles.
Yes.
Okay, got it.
Now you go to the 4 hour,
right.
And you're looking for the big arrow, and you're looking for price to be in the zone, in the same zone.
Okay.
I'm not necessarily looking for 1 or 2 candles, none of that. I just want price to be in the same zone, and I want it to have the same trend.
Okay.
After that, you drop down to the 15. That's all you're doing. Drop down to the 15. You're looking for the exact same thing on the other time frames. The big arrow needs to be the same direction, and it needs to be in the zone.
Okay.
Price. Now, once that happens, now you go into your entry confirmations on the 15-minute chart. On the 15-minute chart.
Okay.
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 Now we're talking about confirmations for entry now. Now we wait for the bearish candle to close below the 15.
Okay.
Once the bearish candle closed below the 15, we look at the MACD in relation to that candle.
Okay, you said 15. Is that the same as the 13?
The 13, I'm sorry.
That's all right.
I'm on a 15-minute chart, but the MA.
Yes. Got it.
So the candle that closed below the 13 MA, we look at the MACD in relation to that candle.
Okay.
What we're looking for is for the signal line for a sell
Right.
needs to be either crossing over the blue line or it's already over the blue line. Or in other words, we want the signal line to be on top.
Okay.
If the signal line is not visible, you can't clearly see that that red is on top, then wait for the next qualifying candle, which is the next next bearish candle.
Okay.
Okay. So once that is happening, the next question is, did the candle close on a support or resistance dot?
Okay.
Did it close on a support or resistance dot? Okay.
Okay.
If it did, don't take the trade. We wait until the next, well, if it closed on the dot, we wait until the next candle, qualifying candle, breaks that zone or break those dots. So in other words, close below those dots or above those dots, depending on the position you're taking.
Okay. Got it.
Okay.
Yep.
If it did not, then we look left at the previous support and or resistance dots to identify TP1 and TP2.
Got it.
Now, what we're looking for is 20, 25 pips, 20 to 25 pips. Because we have to cover the spread anyway, so we're net 20.
Okay.
And whatever that area is that you've identified, the price associated with that area is your TP price. And that's what you would put in the system.
Okay.
And you good to go. I mean, you just keep doing that. That's it, really. I mean, it's really that simple.
And the stop loss is above the base of the arrow.
Right. Now the stop loss will go either above
Right.
the arrow or really above the box. You can go above the arrow or above the box.
Okay.
Right? Long as it's, give it a little, not on the box sitting there, but give it some space or just put it above the arrow for your stop loss. Now, as you are progressing in the trade, depending on, for 20 pips, you'll be in and out. But if you were going for the larger pip amount, then what you would begin to do is move your stop loss down as you are progressing in the trade. So if we're selling, you start, your stop loss is here, for instance, right? And so you got in the position somewhere, let's just say you got in a position right in here, right? So now you're at this point. So let's say you're going for this area here for your TP. You're at this point right here now. Right? Well, we're on the 15-minute though, so it's probably gonna be long. The same thing applies though. But let's say you're here. This is the longer one. So at this point here, you can move your stop loss down, right? And you can like move your stop loss down 10, 15 pips as you continue it. And that's how that will work no matter, what time frame you're trading on. As you're progressing in the trade, just start to move your stop loss down as it breaks each level.
Okay.
But for now, the first position it needs to be above the arrow. It needs to be above the arrow. Remember, this is a 15-minute that you're trading on, so this is more, in and out, basically.
Okay. Yeah.
More in and out. So yeah, that's it, right? I wish that the system allowed you to like adjust the zones when you back test. That would have been real cool, but it doesn't do that. But that is the plan. And on the weekends is where I go and I identify my setups for the week coming in.
Okay.
So we already know odd NZD is definitely a really good potential sell. What are we waiting on? We're waiting for it to break and close, the 13, and then we follow the rest of our confirmations. That's what we're waiting on.
Okay. So that's good.
Yep. Let's see what else is going on with.
Okay. I had a kind of a question for you. In terms of, and it was in the questions, and I'm just trying to get an idea. Are there a lot of setups like in the morning when the New York session opens? Like I know people say, well, of course you don't trade it when it first opens because the spreads are so high. Give it like 20 to 30 minutes and then go back. So are the setups there and you can like set everything up, two or three trades up or a trade up in that morning session? Are they more plentiful at that time to help you get through the day? I don't know.
Well, I guess you can say that because it's a high volatility. The London session is also high volatility as well. So from that standpoint, yes. But the setup begins at the beginning of the setup, right? And that doesn't necessarily happen in the New York session. It can happen in the Asian session. It can happen at any point in time because you're only looking for a big arrow in one of these zones, preferably the beginning. Now, this big arrow just populated. Well, we're on 15 minutes, and we're going to do that on the hour time frame. So on the hour time frame, we looking, and we just looking for a big arrow, right? Okay, right here, for instance. We have the big arrow. Now, a lot of this move, we missed the move. I can look at it. First of all, it's out of the zone, so we missed the move.
Okay.
And then you can even see that, like on the 15-minute, you can see how much of the move you actually missed. Look, all of that. We missed it, right? So, but the hours where we're gauging that at, and then you just kind of go through until you find that one with the arrow just populated. That's what we want.
Okay.
And this is what I do on the weekends. Now, this is very baseline because you can still get in these trades, but that's advanced training. But you can still get in these trades. Like, for instance, this is perfect. This is so perfect. Okay, so it's bearish on the hour, right? It's bearish. It came down to this area, then it pulled right back up in our zone. That's good. That's a second opportunity for a good entry. So you can actually go through your criteria as if the big arrow just populated. So now we're going to go
in our hot zone or it's in our buy zone.
Where
our sell zone. Our sell zone.
Yep, it's in the sell zone. So now I'm going to go to my 4 hour to see. I'm going to my 4 hour to see what's happening. Now my 4 hour don't meet. It's bullish on my 4 hour.
Okay.
It's bearish on my 1 hour. So I won't mess with that. Like I said, it's more advanced training, but nevertheless, we'll get there. But now this is how you want to work it out. And I'm gonna be honest with you, you only really need 2 or 3 good trades a week. You don't have to trade every day. You don't have to trade multiple times a day. You don't have to do that. Now this is a bearish and it's pulling back up. Let's see what's going on the 4 hour. See, on the 4 hour, we're bearish on the 4 hour. That's all I wanted. And we're in the zone. We're around the zone. So now I'm gonna drop to the 15. And the 15, we're bullish on the 15. So it's kind of like a pullback on the 15. I haven't done that kind of advanced training, but guess where we are though? We're in the zone. I don't want to confuse things. Let's stick with the baseline and then we'll build on that.
Okay.
I want things to match up.
So something like that, since we, since this is on like the 15, would it be to wait to see if it goes back up to the sell zone?
Well, yeah, so we're on the 15. It's in the sell zone because it's in that area. Price, a bearish candle did close below our 13, that candle right here. It closed below the 13. Now we want to look down at our MACD. Oops, right? Look at the MACD. Look at the MACD. So the MACD, we want the red on top. Well, this is not clear. Now the red is actually on top, but it's very, very tight. Very, very tight. Consolidation is what it is. So we want it to be some little space between the two lines as well.
Gotcha.
So we would wait. Now, if that happens, you can take this trade.
Okay.
Technically, you could take this trade, right? But yeah, so that is the deal. We definitely went over. I have another session in the waiting room.
Okay.
So we're gonna wrap it on up, but that's what you want to be looking at. This Aussie NZD, that's definitely one on the list coming into next week.
Okay, but one question.
Uh-huh.
When I go to the reference stuff, all I see is past videos. I don't see any documents like not trading plan, the compounding thing. I haven't seen any documents out there at all.
Oh, okay. So
because it has pinned at the top. And so when I click that and go through anything, all that is like videos or things that are on YouTube in the like archives area. But if you can tell me how to get to that trading plan.
Yeah, I'll send it to you though. But the same area where you see the media, it says files. And you hit files, and that's where you see documents.
Okay.
Yeah.
Okay.
That's where you see documents.
So let me try to find it, and if I can't find it, I'll just send you a text and say send it. How about that?
Yeah, no problem.
Okay.
We can certainly do that, and we're good to go. Any other questions?
My recording. Make sure I get my Make sure I get my recording. I want my recording.
I know that's right. No, I got you covered.
Because I got what I need to get my motor going, and if I need to go back and rewrite some stuff, said that's what she said.
Right.
That's good. All right. Well, I'm not gonna hold it to the next person. I know they're chomping at the bit too. But
yeah.
Thank you,
You're more than welcome. So now I'm going right into my next session, but once I disconnect with you, the recording will download. So that'll be happening while I'm in the session, and once that session is over, I can upload.
Okay, I will look.
And I'm gonna send it to you via Messenger.
Okay.
All righty.
All right. Thank you, Janice. Have a good weekend.
You too.
All
right. Looking forward to next week.
Yes, ma'am. All right.
Bye-bye.